Welcome back to the Sprott Money monthly technical wrap-up and precious metals projections. We do this every month, and it's always a fun chance to get caught up with Chris Vermeulen of the Technical Traders. Chris, nice to see you again.
Hey, thanks for having me on the show.
Well, Chris, it's now August. It has been a really excruciatingly long year for precious metals investors so far. That period from April to July was just brutal. But, as July wrapped up, things started to improve a little bit. The Fed gave us some signals that maybe they might have to start slowing down on their rate hike schemes. And now we'll wait until September before the next FOMC meeting. And we got what appeared to be a pretty stout short covering rally in the metals. Let's start with your overall business first at the technicaltraders.com, because you're just not precious metal specific. You say you're always looking for the best asset now. What is the best asset now, and how have things been going?
Yeah, so I mean, it's been a pretty good last couple of weeks. If we take a look at the charts, I'm going to pull up the NASDAQ because the NASDAQ really represents kind of growth stocks. A couple of weeks ago, we had a buy signal on the stock market to get into growth stocks. We have all kinds of our indicators, cycles coming into play where our system was saying, hey, get into the best assets now. So we jumped into about 7 different positions. We only have 2 positions left open. A lot of them hit our targets, and our protective stops have been moving up. And so we've been doing really well in terms of the markets here. We've been in TAN, which is one of the ones that have done very well. It's popped about 15%, hit one of our targets. If you look here, you can see the NASDAQ really it's kind of carved out a bottom. It's moving higher. And if the NASDAQ and growth stocks are outperforming like the SP 500, if we're seeing, a lot of growth stocks like the ARK ETFs really starting to come back to life, those are all signs that, money is kind of getting anxious and they're starting to move back into this market. And if we look at the NASDAQ here, you can see it's a pretty significant level here that we've broken this week. We've been flirting with this resistance high. Today, we're seeing a pop and a move. And I think there's a pretty good significant move, another probably 5 to 6% to the upside on the NASDAQ and even on the SP 500, which equates to probably a fairly big move for growth stocks. So we still like growth stocks, but the stock market in general is just on the cusp here of putting in a really big multi-week or multi-month rally, which I would consider to be a complacency rally, which means more or less it's kind of like a bear market rally. So it doesn't mean that we're starting a new bull market by any means, but it's an opportunity to play things to the upside. But this market is very close. At any point, it could reverse and sell back down and hit new lows. And so that's why we've been very defensive with our plays and closing out some of our trades that have hit our targets, because this market could turn on a dime. Literally in a day or two, most of these gains could be wiped out based on the volatility, the way the charts are set up. So we're being very defensive at this point. We are bullish, but we're not, gung-ho all in on equities. We only have a couple positions left, and we're mostly in cash still because the market is definitely struggling a little bit here.
Well, I think we could probably extend that to just about every market, right? As we're dealing with the old leftovers of the everything bubble. I mean, that left side of that chart of the NASDAQ looks a lot like gold or silver. It was just declining, tried to rally into April and then fell into June and July. But now on the, where it's breaking out, it seems like it's starting, it's definitely made several moves up here. Yeah, it's starting to break out.
Yeah, you can see our trend analysis. When the market goes red, obviously you don't want to own any stocks. It doesn't really matter what sector it's in. When the stock market's going down, it's like the tide going down. We had a little pop and a nice little trade with growth sectors back over here. We're just getting into this next trigger. And that now we need to figure out if we're going to get into something, bigger. But the thing is, when this market is selling off, pretty much everything goes down. We see gold miners get pulled down during bear markets, during big corrections in stock market. The miners and physical metals get pulled down. So understanding like these core trends in the index allows you to really be able to trade not just stocks, but commodities as well, because you generally don't want to be holding almost any asset when the broad stock market is selling off in a big way and the big money flow is all moving out of equities or out of the markets in general. And that really pulls everything down. So just being able to identify when to be in stocks and when not to be is a huge game changer for most traders and investors.
Yeah. And you've identified kind of that conundrum. I mean, are the equity markets anticipating that the Fed is closer to being done than they've been letting on?
Yeah.
The Fed funds futures are starting to price in a rate cut as soon as the first quarter of next year. So maybe the stock market either continues to rally on all that new liquidity that would be coming, or as you said, could roll over any day because the Fed, through all their job owning, is going to try to jam things back lower by talking about higher rates. For the metals, which are in kind of that same, I don't want to call it no man's land, just kind of in the middle, trying to figure out where they want to go. Mm-hmm. Again, you can see that it looks a lot like that NASDAQ chart. Yeah. Let's start with the dollar, though, if you would, the dollar index, because, it seems, not that they trade tick for tick, but especially here in August with so many traders on holiday, the machines have a bigger role than usual. Mm-hmm. And the machines are going to buy and sell gold futures based off moves in the dollar index intraday, it seems a lot. So the dollar is clearly, as you pulled it up there, in a bull trend. So one of the first things that we'd want to see, I would think, is a breakdown of that trend and have it roll over, because that would indicate, well, maybe the Fed is done.
Yep.
But that would put some wind in our sails for the metals. So in looking at the dollar, it pulled back earlier this week as we record this, the first week of August, and tapped its 50-day moving average.
Yeah.
What would you watch for, Chris, technically, to make you start thinking, okay, this baby's starting to roll over?
Yeah, I don't think it's going to roll over anytime soon. But if I was to look for it to roll over, I mean, this is a pretty significant level across the chart. Pretty much, through this high, this consolidation and breakout, this low. And I'd be looking for it to put in some type of topping formation. Maybe it puts in a double top, maybe it, flounders, or maybe it flounders down here for a little bit and then eventually starts to break below it. So this level, about the 105, 20 area, if it was to close below that, it could definitely create a sharper drop. Mm-hmm. And then from there on, it could work itself down. But right now, I mean, really, it is still in a very strong uptrend. We had a beautiful bounce off the 50-day. If the stock market does start to roll over and we start to see fear creep back in, we tend to see the dollar do very well. So if the stock market does roll over, I think the dollar very easily could come back up to test these highs. That will put pressure, a rising dollar will put pressure on metals and miners. And the selling pressure of the stock market will also pull down on those commodities. So I don't think we're really in the clear yet. We've got, stocks are at resistance, the dollar's at support, miners and metals are at resistance. Everything is kind of, at this turning point. Our trend's going to break here and the dollar breaks down, the stock market rallies and we see commodities start to rally. Are we going to have all of those things happen at the same time? I'm not sure yet. And that's what we're waiting for. And that's why we've trimmed off our positions, because we're about to see a very big move and we're weighted to the long side with a couple long positions still. With some leveraged ETFs, and we're just kind of waiting to see if we're going to get follow through on the rally or if this market is going to reverse and roll over.
Right, exactly. And that's important, not just for traders, but for physical stackers as well. If let's say you want to head over to sprottmoney.com and check the deals page and pick up some bullion and bars and that sort of thing. Well, you want to time your purchase, to get as many ounces as possible for your dollar, or your Canadian dollar. And so you kind of have to, want to keep track of price. If you can save $1 an ounce on that tube of maples or eagles or something,
yep,
$20, that's not an insignificant amount of money.
Yeah.
So
they've got a sale on right now, the summer sale. So it is a good time. Everything's cheap. We've had a nice correction in metals and they've got an offer. So it is pretty good.
Precisely. So that's why, people watching this may think, I'm not worried about the trading and all that kind of stuff. But if you're regularly buying metal, as you should, then this stuff's pretty important. So let's now have you pull up that chart of gold, because this is the one that I think is at least most interesting to me, and obviously
right,
moves the metals and the mining shares together. I had this big move down from March when we, with the Ukraine war, and then we got back briefly over 2000 in April. And then, man, boy, did the bottom drop out all the way down. Now, a couple of things I'd like to have you comment on. That low, that tail hanging off that candle a couple of weeks ago, that was 1680. Now, 1680, people that watch price closely, that's another test of that level. You can see it right there. Yeah, look at that. And that's last year. And again, last summer, August the 8th, see that one hanging down in August? 1680. That was a Sunday night when all of a sudden the bottom dropped out. So that's a pretty important level of support. So then you get this bounce, and maybe a lot of it's just short covering, but that's a pretty significant bounce of about $125 off those lows. Getting above the 20-day, but failing to get above the 50-day. So, all right. So now, Chris, what do you watch? Do you look for support now at the 20-day? Break back down below the 20-day? Would that be bad? I mean, what will be your technical signals as this month unfolds?
Yeah, I mean, I like to see a series of higher highs and higher lows. So I would like to see gold create some type of consolidation. So however it pulls back or pauses, we want to see it kind of pause here, build a nice bull flag pattern, which is usually a halfway mark. And then you could see the second half of that move head up later. So ideally, I don't really want to see, gold just rocket higher. You generally think when you have a very strong move that goes straight up, it usually comes straight back down. We had that over here. It gave back half of the move and then the rest of it. We had a very strong pop over here. It fizzled right back out. So in reality, from a technical standpoint, we want consistent trends. We want something that is kind of just chugging away, kind of slow and boring, because that is a consistent trend. If gold was to pop and rally here, it's most likely going to be because some piece of data news hit. And if you get a parabolic move on news, it's going to give back those gains later. So in a perfect world, we're looking for it to flag sideways, build a little launch pad. And then if it starts to come up and break this previous high, it could be the start of a new breakout to the upside. But the grand scheme of things, it is still you're making a series of lower highs, lower lows, and I think it's got to build some base. Maybe it's going to flounder down here for a while, build a double bottom. Who knows what it's going to do? But at this point, I am not interested in getting in for any type of short-term trade yet. I want to see it build a platform to launch from, or for it to pull back and start to build a bottoming formation, and then see it break out of a very clear bottoming formation, which would be something more like this. If it was to come down and chop around for a while, we'd have this line right across here, which would be a fairly significant area. This would be like a rounding formation, and eventually it would pop and have a big move up. So I think there's a lot of work to be done in terms of it changing its trend back into a new uptrend.
Hey, and for an analogous period, can you just flip that to a weekly chart and go back to the end of 2018 and the first half of 2019? Let's kind of focus on that period. Okay, now see, since you pulled that up, Chris, what I recall is the end of 2018 and 19. The Fed was allegedly going to be hiking all through 2019. We had that liquidity crisis and the stock market collapse in the fourth quarter of 18. And that was that first Powell pivot in December of 18. And see where price was, it had come down sharply then too. And then it started to recover, rallied for a while, pulled back. But then when it really took off was when the Fed actually did change policy about 5 or 6 months later in June of 19. So Powell's kind of hinting at that again last week. I mean, could the chart kind of play out like that?
I think it could. And this is exactly what I was talking about a second ago on the chart. We've got this nice rally up. Now we need to see it flag out and build a platform to launch from, right? Right. And so that's what we want. We don't want to see gold just pop up because it's just too much and it'll usually come back down. But this is exactly the type of scenario we're looking for when we go, the hard right edge here and go back to the daily chart. This is what we're looking for. We've got this rally. Maybe it's going to go a little bit higher, but we want to see it eventually flag with a bull flag, and that could be the start of something much more significant. So,
and you can time that up, like I said, just the way the Fed kind of hinted at that in late 2018, and actually changed policy 6 months later. And gold kind of bid its time and kind of slightly moved higher, and certainly at bottom. I don't know. We'll see. Let's take a look at silver, Chris, because a lot of people stacking silver at Sprott Money. What an interesting chart this is too, blasting above its 20-day, extending all the way, again, almost precisely to its 50-day, just how the dollar index bounced from its 50-day. Silver was rejected at its 50-day. What are we going to watch for? Is we don't know if it's going to bounce higher, if it's going to roll back over, make another low. What will you be watching?
Yeah, it's the same thing as gold, other than when we look at the bigger picture of silver here. Let me just zoom in a little bit more. Silver's done a little bit more damage, but silver always has a very noisy chart. I find it's always shaking all over the place. It had this really clear line, which equivalent to gold. Gold tagged it and it's had a really strong bounce off it, but silver actually broke through it, found it as resistance. It sold down. So silver's got a little bit more of a downward bias. But in the grand scheme of things, we're looking for the same type of thing with silver. We're looking for it to like build a bull flag pattern, consolidate sideways or slightly lower, and then for it to start to reverse and head higher. And that'll start to create a higher high on the chart and bring it back up probably to this $22 resistance area. Yeah, they really do. All of them do have a lot of work to do to get back into what I would consider a safe uptrend to get into.
Yeah. And to that end, higher price usually leads to higher prices, especially coming out of a low like this, where there's so many hedge fund shorts. While you're at Sprott Money, I just give myself a plug. I wrote earlier this week an article about the silver commitment of traders positioning and that massive hedge fund short position, which is there for the squeezing. I mean, that's all part of why we rallied 10% in the last 10 days. But we need some higher prices to keep that pressure up. And so getting above the 50-day, would that kind of start the process, or what would you watch?
Yeah, I think getting above the 50-day will be pretty important. I mean, silver's pretty noisy. It's been chopping through it a lot. It's not in a very, right now it's in a very strong downtrend. So if we can get above it, hold above that level, it'll be the first, it's kind of like the first shot across the bow that, hey, this trend might be turning up.
Okay.
So that would definitely be a level that could start to spook traders. But silver chops, I find, through a lot of moving averages all the time. So it's kind of numbed that sensitivity, I think, for a lot of people, that they don't really care too much about the moving average. They're probably looking more at specific price action, probably shorter term timeframes to try and get a gauge on where silver's headed going forward. Yeah,
that 2050 level, you can see it horizontally looks important too. Let's get to the miners and we'll wrap up, Chris. Let's start with one specific one, because this is weighing on the big ETFs, and that's Newmont. It washed out a week ago, last Monday, about 10 days ago as we record this, to some of the lowest levels it's been in a long time, some of the most oversold levels it's been in decades, maybe. That's a pretty gnarly chart. But maybe it's at a spot of support. I mean, I know Newmont, we can take back to the 1980s, I think. What do you make of it?
Yeah, if we go way back into the 80s, 87, when it peaked out, I mean, that's what it hit just recently, and it pierced through it, and it's collapsing back down, and it's pretty much right back to the medium price, like right at a really critical pivot zone. It's also a support trend line, as you mentioned. We were talking before here. So this is a pretty important part, I think, for Newmont price, for it to find some type of technical bounce. But overall, if this level's broken and there's more blood in the streets, the stock market goes into a bear market, whatever unfolds here, this could really wipe out and decline. But I mean, the sell-off in Newmont is just huge. And obviously that is weighing down very heavy on the miner ETFs, because it's a big position in all those gold mining ETFs.
Yep. And a lot of standards are specific to Newmont. Maybe some of the other bigger miners aren't having the same cost and production issues, but nonetheless, I mean, this is the biggest one, and so it's hurting the GDX. And let's finish with the GDX, because unlike COMEX gold and COMEX silver that broke above their 20-day and then ultimately tested their 50-day, GDX can't even get above its 20-day.
No, it's struggling. It's not a good sign. It's definitely not a good sign.
They had to change the symbol to PIG rather than GDX. It's just, what a drag that is. So what is that? I mean, the 20-day just kind of, it's not like it's forcing it lower, but at least it's got to get above there, doesn't it, before you can even begin to start feeling there's a hint of hope?
Yeah, I do. I find if price is generally above the 20-day, in a way, I generally consider it an uptrend, a short-term kind of swing trading uptrend. If it's below it, it's in a pretty strong downtrend. And I look at the 5-day moving average for the same type of thing, which is that baby blue line here. It's my momentum. If it's on average below this little blue line, we're in a very strong momentum trend down, and it's the opposite during an uptrend. So, the blue line here is the momentum. The pink is kind of like swing trading. The blue line is kind of like position trading, could last months in position. So they all have a different kind of bias and kind of trend and cycles to them. But definitely the fact that it's just stuck under the 20-day and rolling over is not a good sign. I mean, if gold was really to bounce and take off, you'd think the miners would be taking off as well. But I mean, when we take a look at the our band hot list of the best assets now, the two bottom of the barrel, the worst ranking sectors are SILJ and GDX. I mean,
that's the WAN.
It's just terrible. Yeah, the worst asset now. The crazy part was they were right at the top of the list earlier this year. Like if we were to go over to GDX and just look at the beginning of the year, if it'll load here, right up here, they were coming to life. They were on the verge of starting something very, very massive. But then the stock market kind of flipped to bear market mode, and there was huge liquidation. And of course, it pulled them down. But this sector can change very quickly. I think we could see a lot of sectors that have been doing well this year start to sell off even more. We see the gold miners come back to life in this complacency rally. Yeah. And I think the gold miners will work themselves back up this list. And that kind of, just to quickly go back to this complacency rally that I mentioned here. So this is the emotions of the stock market participants. And I feel as though the stock market has had this correction. We kind of started a bear market, and now we're going into this complacency mode. And this is where we've seen in past stock market tops, this is where we see gold, silver, and miners come back to life and become the top leading sector. And they can do very well for several months, even though the stock market really doesn't do anything or could actually be going lower. So this is where we're at. And maybe gold miners and all that have finally found a bottom, and they're about to come back to life. The thing is, if this is a complacency rally, when the stock market does start to break down again, you do want to liquidate positions, because everything generally gets pulled down with it. Not too often you'll see gold miners rally in a bear market. So it is a trading opportunity. I think long-term, if we go through a bear market in the equities, we'll see precious metals will be one of the first pockets to bottom, probably months before the stock market does. And that'll be the prime opportunity to get in for the next major wave higher, I think, in gold, silver, and in miners, something that's like an investment. You could probably be in it for several years and see hundreds of % return. But I don't think we're there yet. I think there's a lot of chaos to happen over the next 8, 12, 16 months from now.
Well, and if I could speak for pretty much everybody that's watching, I'd say the mining shares are right now in that capitulation, anger, and depression.
Yeah.
Kind of looks like the chart of GDX, actually.
Yeah, exactly.
We are right now in the GDX, right under the word panic. As I look at it, it looks just like the GDX chart we just showed.
Yeah, we're somewhere right in here. And if you look at this chart of the emotions, when the masses, it's like a school of fish, when the masses are thinking and feeling the same thing, you get this huge move, complacency, and bear market phase. So just see this pattern. And if we go back here and we take a look at this, I think we've covered this before, but there might be some new viewers. You look at the ARC ETF.
Oh, yeah.
And this is it. You've got
same thing.
Your stage one, you've got your rally. We had the blow off phase that everyone piled into the growth stocks. And then it struggled and has like a complacency kind of pause. And then it's broken down. It's been in a bear market. I mean, it's down 70%.
Right.
And so that was the emotional roller coaster. That's the majority of market participants. And unfortunately, they're all angry, depressed, frustrated. They're down huge money. And that's simply because, most people don't understand how the market moves. If you can identify the 4 stages of the stock market, you're really golden. I mean, you're set, because if we take a look at the 4 stages, stage 1 is usually a dead stage. It's kind of going nowhere. We don't want to touch it yet. Kind of gold miners are kind of in that, in this stage 1, I think they still have some work to do. Yeah. Stage 2 and stage 4 are where we have huge trends. Whether the trend is up or down, it doesn't matter. Big money can be made. And right now, the stock market itself is in a stage 3. It's a very tough time to make money. You get a hot wave of one sector for a week or two, and then it rolls over and dies. So if you can identify which stage we're in, every asset is in a different stage at different times generally. So you need to gauge it. But if you know what stage you're in, you know whether to be aggressive or to just avoid it. And, the ARK ETF is a perfect one. Right now, the ARK ETF is like right here, late stage 4, starting stage 1. I think gold miners are kind of in a stage 1 phase. They have some work to do before they start the next big rally. So that's kind of, we're in different stages for different asset classes.
Yep. Great stuff, Chris. Obviously, that's just a hint of your valuable service that you provide at thetechnicaltraders.com. That's the website they need to go to learn more about what you do?
Yeah, they can go to thetechnicaltraders.com. And I do videos like this every morning for subscribers before the opening bell. We go over what happened yesterday, what happened this morning in pre-market, how it's going to affect any positions and what we're doing. And I provide everything from trading hot sectors to index, bond, currency trading, and then all the way down to passive long-term investing signals where we just want to know when to be long stocks and when to avoid bear markets with our retirement accounts. So kind of provide all that in a total kind of ETF package. And we just trade ETFs. We keep it very simple. And you can move large amounts of money because it's an ETF, a basket versus individual stocks that are all over the place.
Great stuff, as always, my friend. And again, before you go, be sure to thank Sprott Money for all this great free content that they put on the internet for you. Go to that site, sprottmoney.com. You can see Chris got it pulled up, their deals page. You can look storage, great storage options as well for your physical precious metal. And again, that summer sale continues through the 7th. You take advantage of it. It's one of the biggest sales they have all year. Again, thank you, Chris. It's always good to visit with you. We'll see where we go the rest of this month. Got Powell's speech at Jackson Hole later this month. That'll probably be a big deal. And then, hey, by the time we get around to doing this again, it'll be football season. So at least we'll have that going for us.
Yeah, sounds good. All right. Well, thanks for having me, and we'll talk soon.
All right. Thanks, Chris. And from all of us at Sprott Money and sprottmoney.com, thank you so much for your time. And thanks for watching. And we'll do another precious metals projection video for you next month.